Hey traders, it's John Fortune here of this week's weekly Forex Forecast. I hope you're having a great weekend. Let's kick off with the DXY. Last week, I went into last week with a bearish bias on the dollar index as we highlighted in last week's weekly Forex Forecast. And we did start to break down last week in the US dollar and we came down right to the target at the 90.19. I did post this breakdown on Twitter live as it happened, so if you don't follow me on Twitter, feel free to join me over there if you want to get some posts during the week as well on these markets. And we ended up getting some really nice follow through from the breakout because of non-farm payrolls last week. We had a big miss in the non-farm payrolls data last week, and this is significant. Why? Because if we are not seeing economic growth as forecasted, if we're not seeing economic growth pick up, there is going to be no tightening of monetary policy anytime soon to control inflation unless we start to see economic growth picking up. So the idea of interest rates being raised or any tightening policies coming in just got kicked down the road with that non-farm payrolls data coming out yesterday. So going into this week, I do have a bearish bias on the DXY once again. I think DXY weak positions going into next week are going to be one of the best plays, and that's primarily what I'll be focusing on going into next week is the dollar weakness setups. So any pullback in the DXY will be viewed as an opportunity to start once again to look for bearish reversals down to the next key of support to the downside in the target set at the 89.71. We can see the effects on the S&P 500. We actually broke higher off the back of this bad news. Why? Because the market is a discounting mechanism. It discounts the bad news and looks ahead to the central bank reaction, which would be to delay the tightening of any monetary policy. And also on the fiscal side with the government as well, will be forced to delay any serious tightening on the fiscal side until we start to see economic growth picking up. So we broke out to the upside. Technically speaking, this is very interesting because it's the same setup as we saw previously, this type of ascending triangle with a test. And then once we broke the high previously, we had a big rally in the S&P 500. So it does look like this is the start of the next leg up in the S&P 500. Any pullback in this market would be viewed as an opportunity to look for bullish reversals up towards the target set for next week at the 4330.50. Euro dollar, last week I was looking for a move into the 1.2155 and we did come up and we took out this target, and that was pretty much the high of the week last week. Very simply put, going into this week we're approaching target 2. I would like to see a correction first, possibly if it trades into the 1.2192 first, and any pullback in this market towards the 1.2011 next week will be viewed as another opportunity to look for bullish reversals up towards the next key of resistance, the upside and target 2 at the 1.2249. Crude oil. Crude oil recently broke out of an inverse head and shoulders and we've started to reverse to the upside. Crude oil is benefiting from that weakness in the DXY. We're seeing commodities rising. And last week I was looking for a rally into the 67.24. We had a really nice move last week. We had this bull flag breakout. However, we stopped just shy of the target. So for anybody not involved from last week, this pullback is a second opportunity to start to look once again for bullish reversals in this market. I'm going to be looking up towards the next key of resistance, the upside and the target set at the 67.24. And if we can break through here this week, I wouldn't be surprised to see us coming up to the second key of resistance, the upside and target 2 at the 68.70. Next is gold. Now last week I was looking for a rally to the upside in gold and we did take out both targets and we finished the week right at the second target here in gold. Make no mistake, this was a major breakout in gold last week to the upside, and we also have the fundamentals behind it with what looks to be a steep rise coming in inflation. If we scroll out here just to give you an idea, I am overall looking for gold to come up to the 2075. This is a massive bull flag in gold. And last week we saw stop losses getting taken out to the upside, and it looks like in the bigger picture we are going to be heading to new highs in gold. So coming into this week, for anybody not already involved from last week, and this was another breakout which I posted before it happened on Twitter, but for anybody not involved in this from last week, I would be looking for a pullback in gold towards the 1797.64. And any pullback into this area is going to be viewed next week as another great opportunity to look for bullish entries up to, in the near term, the next key of resistance, the upside and the target set at the 1868.44. But as I say, I do think in the bigger picture, we could now be on our way to 2075. We may get a bit of noise up and down on the way, but I think that's where we're now heading. Next is silver. Now silver also benefited from that breakdown in the DXY, and if we are going into a third wave to the downside in the DXY in the near future, this of course is going to benefit silver to the upside as well. Last week we broke out of a bigger inverse head and shoulders pattern in silver, and going into this week we do have some nice confluence over here with the trend line and the horizontal line. Of course the horizontal line, as anyone who follows this channel regularly will know, is what I'm more interested in. The trend lines are more as a guide. For example, if you broke through the trend line and tested this level here, this would not be bearish just because you've broken the trend line. But we do have some nice momentum in this market going into next week. So very simply put, any pullback in this market should be viewed next week as an opportunity to look for bullish reversals up towards the next key of resistance, the upside, and the target set at 28.18. Next is pound dollar. Now pound dollar is an interesting one. We have a double bottom reversal here confirmed above the 1.39190. You can see we were just testing it on the underside and we broke through at the end of last week. It looks as well like we have a 1, and this is a 2 wave over here with an A, B and a C. If this is the case, this again confirms the potential third wave down in the DXY, because this would be a third wave to the upside in pound dollar, and any break above the high of wave 1 would see, if this is a third wave coming, and we'll see capitulation, short covering, we'll see strong liquidation, and we'll see the market shooting through the high of wave 1. So that's really something to look out for going into next week. Either way, if we can get a pullback going into next week in this market, this is going to be an opportunity to start to look once again for bullish reversals up towards the next key of resistance, the upside, and the target set at the 1.4116. Just bear in mind, if this is a third wave, we could be seeing this market rallying over the next couple of months even. So it's not for me to tell you guys how to risk manage your own accounts, but if you do like the look of this and you see it as a third wave and you want to hold on past the 1.4116, we could be seeing a much bigger move to the upside in pound dollar. Next is Aussie dollar. I highlighted the 0.78480 last week, and we did trade into this, and this was pretty much the high from last week in Aussie dollar. We are trending to the upside in this market ever since we reversed with this inverse head and shoulders reversal down in this area, and we pulled back, retested, and now we've rallied through the high. So again, this is the kind of setup where you can see big rallies to the upside, and we're seeing this in a number of the DXY pairs. So very simply put, for anybody not involved from last week, any pullback in this market, potentially a retest of the 0.77670, would be viewed as another opportunity to look for bullish reversals up towards the next key of resistance, the upside, and the target set at the 0.7894. The same thing stands with this market as well. If you believe the DXY is heading for a bigger move down, then you don't have to book your profits, but that is the short-term target in this market for next week. Next is New Zealand dollar. Now last week I highlighted 0.72680 in this market, and we did come and take out this target, and we finished the week right at the target here. We are trending to the upside in New Zealand dollar, so very simply put, going into next week, any pullback in this market, as long as we don't break the low over here, will be viewed as a potential opportunity to look for bullish reversals up towards the next key of resistance, the upside, and the target set at 0.7359. New Zealand Swiss franc. Last week we were looking for a sell-off into the 0.90290. We did take out this target, and we came very close to the second target from last week at the 0.8997. This was a really nice move to the downside in US dollar Swiss franc, and we caught that DXY breakout as I posted earlier. Coming into this week, we are very close to the target. I like this because of the momentum. When you have this kind of momentum, you're almost certainly going to see lower lows in a market like this. Compare this to what we just looked at in New Zealand dollar, for example, where we're sitting right at the previous high. This is a better market going into next week. I just want to make it clear, I do not advocate for shorting in this area here and placing take profits here. That would be an insane way to manage risk, and I don't advocate for that at all. What I would like to see, however, is if we could come down and take out this target first, any correction in this market going into next week, pulling back to give us nice risk to reward down to the next target would be a great setup, and once again, a great opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 0.8926. And finally, to wrap up the dollar pairs, we have US dollar CAD. I have highlighted this as a market to watch to the downside over the last 2 weeks, and this has been a fantastic market, really selling off hard. And again, we go into this week with momentum to the downside. We took out both targets last week, and we finished the week right at the second target. And I did make a point last week that we were quite close to the first target, and I did think we had a very good chance of coming down to the second target at the 1.21370. Very simply put, going into this week, I do favour this to the downside once again. Very similar to US dollar, Swiss franc, we have really nice momentum. So out of the dollar pairs, I do think this is one of the better ones. Any pullback in this market, and perhaps we come back and retest the 1.22680, but any pullback would be viewed once again as another opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 1.2005. Just something to bear in mind, every market we've looked at so far is connected to the DXY, even the SPX. So please do not take 8 or 9 positions in dollar pairs next week and think you are taking 8 or 9 separate trades, because if you take $8 trades at 1% and the dollar reverses, you're going to lose 8%. You'll get stopped out on all of them. Euro yen. Euro yen was a market I highlighted last week to look for a pullback before a rally into the 13278. We haven't reached it just yet. So for anybody not involved from last week, because the market's already started to move, what you would need to see is any pullback in this area once again would be a second opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set from last week at the 132.78. Franc yen, I highlighted this as one to watch to the upside to look for this breakout, and we did start to break out. Really nice rally. We stopped just shy of the target at the 120.79. So for anybody involved from last week, I would be looking for this to complete this week, taking out last week's target, and then any pullback would once again be viewed as an opportunity to look for bullish breakouts up towards the second key of resistance, the upside and the target set for this week at the 121.61. Pound yen. Now pound yen pretty much did nothing last week. I am still looking for further advances, but you can see we're sitting in this kind of ascending triangle formation. So I would like to see a little bit of added confirmation in this chart first before I look to trade it. What I would like to see is a breakout above the high with momentum, and then any pullback in this market would be viewed as the opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 153.79. Aussie yen, another market I highlighted last week for a correction and then a rally into the 85.41. We had a correction and a really nice rally. We stopped just shy of it. So for anybody not involved from last week, there is no risk to reward up here. So I'd like to see this complete from last week. And then any correction as we start to see some profit taking back down towards the 84.48 will be viewed once again as an opportunity to look for bullish breakouts up towards the second key of resistance, the upside and the target set at the 86.46. CAD yen, you can see this market is just channeling to the upside, and last week I was looking for a pullback and a rally into the 90.02. We did have a correction and a rally. We stopped just shy once again, so for anybody who was involved in this pullback last week, I would be looking for this to take out the target set from last week at 90.02. We're starting to get a bit extended, and it does look like we could have 1, 2, 3, 4, and then a fifth wave up here. So what I would really like to see is once we take this target out, if we can start to correct back in this area, that would become a great opportunity to start once again to look for bullish breakouts up towards the second key of resistance, the upside and the target set at the 90.79. So that is it from me for this week, guys. If there's any markets I haven't covered in today's video, feel free to leave them in the comments below and I will look through the markets, and if I see anything interesting in the markets requested, I will put the analysis up on Twitter for you. And as I said before, I will be posting throughout the week, so if you want some midweek updates, you can find me on there as well. With that said, I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.